Hey everyone, this is T, and it is November 12th, Friday night. Market closed up here a couple of hours ago, so take a look at this week's action. A few different spots I'm interested in. I'll give you a look at some of my open positions, and then in Sunday's video, we'll fire up the scans here, get a bit of a watch list going. But I do hope that all of you survived the pullback of November 2021. Quite the pullback we had there. So, obviously, being sarcastic, you got a little bit, I hate to call this selling pressure, and realistically, this kills me. So I was on the road a little bit this week, and, I'm listening to the different trading rooms, I'm looking at the chats, etc. It just always makes me laugh how the market can go up for 15 days in a row. And then as soon as we pull back, everybody kind of panics a little bit. So it's just always interesting. The market is crazy strong. The market gets extended. And up here, you typically hear traders say, man, I can't wait for the next pullback so I can buy the dip. Then we get the dip and everybody gets a little bit scared. I don't know. I always think it's pretty interesting. But realistically here, you flushed. Again, I hate to call this a flush. We gracefully dipped to the AEMA. And that was just about the end of it. So, structurally here, nothing changes this week for the S&P 500. Structurally here for the Qs, kind of flirted with the idea of coming down to the 21 EMA, but no such luck. So, that potentially was the sell-off of November 2021. But here's my thought process. We haven't tested a 21 EMA in quite a while, and maybe we don't here at all. But my thought process is this trend in the market. So the S&P, the QQQ, just pretty much the trend across the board. I think it continues into December, January. And while your daily charts are maybe a little bit extended here, if we look at a weekly chart, your S&P, your QQQ rather, this is week one of firing a weekly squeeze to the upside. So a good weekly squeeze can give you 4, 5, 6+ weeks of momentum. Now, it doesn't mean that that momentum unfolds without any pullback, but in terms of looking out into December and looking out into the new year, you got a heck of an uptrend here. You got a bunch of bullish momentum, and now you got a weekly squeeze firing long. So we might get a few dips here. I think any dip, quite frankly, is a buying opportunity. So I do think the trend continues over the next few months. You just want to pick your spots wisely. But you got a weekly squeeze there officially firing long for the QQQ. S&P 500, you do have a weekly squeeze here, which hasn't fired just yet, but the same principles apply. That bad boy fires, could be another month of momentum here. Let's take a look at these small caps. In the small caps here, this is one of the more interesting, I think, weekly squeezes in the entire market. We can look at IWM, and you've had this base here in this weekly squeeze for basically a year, really. Then let's see. We start chopping here early March, so it's a good 6, 7+ months here of consolidation. Weekly squeeze looks like it could fire to the upside here. So with patience, what I'm trying to do with the small caps is pretty much waiting for that morning where we get a good flush. And so long as that flush doesn't take you deep back into that previous range, I'm looking to buy the dip here with the mindset that this weekly squeeze, like pretty much any other weekly squeeze in an uptrend, could give you a bunch of momentum. And I'd like to join that party there. So the small caps look good. But there's 3 major indexes. Your S&P, your QQQ, your small caps. You have weekly squeezes teeing up here. So to think the party can't continue into December into early 2022, the structure's there for it. So it doesn't mean we don't get pullbacks along the way. But I do think the path of least resistance is going to continue to be to the upside. I guess we can look at the Dow real quick. And there's nothing wrong with the Dow either. Good structure. And there's a weekly squeeze. So across the board on your indexes, you've got weekly squeezes. I think they take us higher here. Before we jump into a couple of stocks, a couple of setups, let's go sector to sector. And obviously technology looks great here. A little bit extended, but tech is looking good. The semiconductors extended but bullish. Energy. Look at that bad boy. That's a damn good looking daily squeeze. Well now. So my Friday night just got exciting. I'll be diving into energy here. But a good trend, a good structure. So take your pick here. There's good trend and good structure almost everywhere. That's a good looking daily squeeze though, so I'm pretty interested. So energy looks good. Your financials here. Here's another one. Good trend, brand new daily squeeze. For a guy like me, it's tough to not be at least interested. So one thing I'm noticing is this isn't a market where, it's all technology and the semiconductors, while everything else is kind of blowing wind. It's just the opposite. Everything looks really solid here. Financials, energy, semiconductors. So, like I said in Sunday's video, we'll run some scans here, and we'll be sure to take a deeper dive and look under the hood of the financials, energy, see if there's some squeezes we can trade there, but financials looking good. Healthcare, looking good. Industrials, looking good. Consumer discretionary, looking good. What else is there, my goodness? Transports, looking good. Home builders. Y'all get the point, right? Everything looks pretty bullish here. So, tough to pick a sector right now that I would want to short. Even the communications are trying to clean themselves up a little bit here. So, generally speaking, the entire market is pretty damn bullish here. You got good trend, you have good structure, and you got a lot of good squeezes all over the place. So, I think you look for the trend to continue. Now, in terms of where my focus is going to be, for me, it's a pretty simple formula. And these are my favorite swing trades, by far. Is in a bullish market. Let's get Apple up here. But my favorite swing trades are in a bullish market, finding a bullish trend within a bullish sector, and then finding a squeeze, and then building my position, and then basically getting out of my own way and giving the trade and the setup plenty of time to unfold. So one example here is Apple. You've got a great looking weekly squeeze, green 10x bars, stacked EMAs, nested inside of your weekly squeeze. There's a 3-day. And now as of this week, there's a brand new daily squeeze here. So you've got squeezes all over the place. And again, to me, it's pretty simple, where if, it's the thought process where if the trend for this market continues, technology is obviously a pretty big part of that trend, and Apple is obviously a pretty big part of technology. So if the market rolls over from here, down goes Apple. If the trend continues into December, January, I think you see the weekly squeeze taking Apple here towards 160. So I'm a pretty big fan of Applebee's here right now. And in my mastery, we started scaling into January 21st expiration put credit spreads, and we got our short strikes here at 150. And we're going to continue to scale into that, especially with a good-looking daily squeeze there. But Apple is one spot. Trend continues. I think you got some good upside here. Another name that we worked entries in last week in the mastery and in the options room is Netflix. So I think another one of your better trends in the market, especially since you fired that weekly squeeze back here in August, September. It's just offered like this such a solid 1, 2, 3 really good opportunities here to build a swing position at the daily 21 EMA. You had a daily squeeze that time around. No daily squeeze over here, but you probably had a 4-hour squeeze. And here we find ourselves again, nice flush last week, coming back to the buy zone. So we're selling some put credit spreads here, and I do want to add to the position. I think it all depends where we open Monday morning. A name like Netflix, certain names have certain personalities. This one, once it gets going, once it heats up, tends to really heat up. So we'll see if we get a dip here to add to the position. But regardless, I think we're in a pretty good spot here. So we have December 17th expiration for Netflix, and in my mastery, gotta love this trade, 620, 615 put credit spread, and we put that on last week. We're already at 50-ish, 60% of max profit. So we do want to add to that. And then in the options room, we have a spread here with short strikes at 650. So ultimately, Looking for the old flickster here to make a push towards the promised land at 700 plus. If you get a dip along the way, we're going to add to that position. But it really is, so straightforward. And I think good swing trading, it should be straightforward. It should be really simple. Find an uptrend, find some momentum, get a pullback to your buy zone, and then take a position and give it 30, 40, 50 days till expiration. The trend continues, you're typically going to walk away with a paycheck there. So I think Netflix is looking ripe for a push into 700, and the last spot I'll cover here today. And again, we're going to go into more detail here. We'll run some scans, price out a few trades in Sunday's video, so make sure you keep an eye out for that one. But next up here is Amazon. And in my own account, I took a position in Amazon earlier in the week, and I got my mastery in here this afternoon. So you've got some squeezes on this. Let's see, monthly chart. Yeah, you've got some squeezes here. Monthly squeeze. The rare monthly squeeze. Squeeze on the weekly chart, squeeze on the 3-day chart, squeeze on the daily chart. And hold on to your belt buckles here. 4-hour squeeze. So it's a total squeeze fest. But what we're doing here is we're trying to get positioned now for the potential weekly squeeze firing to the upside. In other words, if the weekly squeeze fires long over the next 2 or so weeks, I'm not trying to chase the stock. I don't want the headache and all that FOMO crap of trying to jump in here after you're already releasing, crap load of momentum. So rather, I'm going to find the consolidation with a monthly, a 3-day, a weekly, a daily, a 4-hour squeeze. I'm going to build my position in that consolidation, and then I'm going to let it fly. I'm going to let it rock. If the trend for the overall market continues, and the trend for technology continues, well, Amazon here, the big Zon, being a pretty big chunk of technology, it only seems right that this continues higher as well. So to me, it's that combination of trend, structure, momentum, and squeezes all over the place. That's what we're focusing on right now. So for the Amazon, my personal position, let's see, we got going out to January here. Going out to January. But my personal position, I've got 3,400, 3,370 put credit spread, and today I brought the mastery on in here to a 3,350, 3,340 put credit spread. So we've got some Apple, we got some Netflix, we have got some Amazon here. In terms of, show you this real quick. There we go. So here's a spreadsheet. I got a few of those trades on here. So there's both the Netflix trades. There is Apple. And there's both the Amazon positions. So again, this is all relative to account size. So the dollar profits realistically doesn't so much matter. It's the structure, the entries, the execution. That's what really should matter to those of you watching, because I don't know what account size you have. You don't really know what account size I have. And these are all just, pretty numbers on a spreadsheet. What's really important to me is that y'all can watch these videos, take these ideas, and then go implement them to bring home your own profits. To me, that's more important than saying, hey, here's how much I made, or here's how much I'm going to make. I want y'all to be taking these kinds of trades and these kind of trends with me. But in terms of my position sizes here, between the 1, 2, 3, 4, between the 5 of them right now, max profit is about 22,000. And I would like to add a bit more exposure, mainly to Amazon here, and get that max potential profit on those spreads up to about, again, it doesn't matter. But 30, 35,000 or so. But again, what matters here is the structure, the trend, the timing, the squeezes, all the beautiful stuff that I think is going to consistently lead you towards profits. And again, those profits are all going to be relative to your account size, your position size. But that is what we are rocking and potentially rolling with here into December, January. And these could all be a total bust, so stay tuned. Obviously, I'll be the first one to come back and say, hey, that didn't work out. But these are my favorite swing trades. I sleep like a baby at night, knowing I have put credit spreads with plenty of time till expiration and some of the strongest trends in the market in one of the strongest markets I think we've ever seen, or at least I've ever seen. I sleep pretty good knowing that. And I kind of look at it like an accounts receivable mentality, if that makes sense. Meaning I'm not really trying to get paid by Amazon or Apple next week, nor am I really all that concerned with exactly what they do next week. Rather, I'm thinking out into Christmas time. I'm thinking out into January. I'm trying to plant those seeds now so that if the trend continues, well then 3, 4, 5, 6 weeks down the road, I'm picking up some decent paychecks here. And my goal in the 2022, is how many rounds of good swing trades like this can I get under my belt? 20, 30, 40? I mean, we'll see. But that is what I've got for y'all here. Another interesting week in the market. I think they're all interesting. But what I think is going to be really interesting is watching how these weekly squeezes in Apple and Amazon develop over the next few weeks here. So stay tuned. Shall not be dull. I hope some of you are taking action on any of the good setups in the market right now. Energy, financials, I mean, you name it. There's good looking structure out there. So stay tuned for Sunday's video. We'll take a deeper dive here. We will dust off the scans, fire these up, and see what else is out there aside from a few of the spots we covered here today. But as always, Chandler and I appreciate y'all being subscribers. And if you're not a subscriber already, go on ahead and make sure you do that here right now. And I'll catch you on Monday. Actually, I'll catch you on Sunday and Monday. Talk to you then.